All right, everybody, welcome. Thank you guys so much for joining. I want to go ahead and introduce Sam. Sam is from Freddie Mac, and he's going to be bringing us a lot of great information on regards to, the lending for the future. As you can see, he has it up here. So Freddie Mac Affordable Suite. And I know we've got a few people on already, so I want to go ahead. He does have also an underwriter on the phone. So I do want you guys to please do not be afraid to ask questions. I will be co-hosting with him, meaning I can check out the chat. And if you guys want to ask any questions, you can press the little raise button on the chat or put a question on the chat. And, we'll I know Sam is more than happy to answer them as we go or at the end. What works best for you, Sam?
Either one is fine.
Okay, cool. So if anybody has any questions, again, don't be afraid to ask. This is the perfect moment to ask, some our specialists at Freddie Mac. And I'm going to let Sam take it away.
Thank you so much, Ingrid. I appreciate it. It was an honor that you reached out to us and said, this is important because of what I-Corps lending mission is. And obviously you guys are really focused on increasing your affordable lending footprint and impact in the space that you provide. And so I just wanted to just say thank you for saying this was important enough to keep you and your team for about an hour of your time so we can get a refresher and overview. So I appreciate that. My name is Sam Noel. I am one of the affordable lending managers here at Freddie Mac, and I have the pleasure of having Gene Beard with me. Gene is an underwriter. Gene, if you like to say a word, Gene is an underwriter here. So you're actually in for a treat. Gene, good afternoon to you, because I know she's in Texas, so it's afternoon there. So Gene may still be on mute or something, but Gene Beard is awesome. So you guys are in a real treat because a lot of times it's not always easy to have underwriters a part of this call, but I wanted to make sure we added even an additional value to you so you can ask your questions and be successful. So when it's time to go back to those files that you may have already in your pipeline, or when you're out getting some new deals, you can refer back to this. So the team has my deck that I'm going to present on, so you will have access to that. I've already sent them a copy, so they will send that out after the training on today. So let's just jump right in. So first of all, thank you all for being here. I just told you a little bit about me, but I've been in the industry, probably just shy of 30 years. Started in originations. Pretty much most of my mortgage experiences on the mortgage origination sales side. Front end of that, I've worked in the primary segment for most of my career, and came to Freddie Mac in 2019 as an account rep, for lack of term, for affordable, and it's been fantastic. So it's been different working in the secondary market, but it's been a lot of fun. So our core beliefs, just to set the tone before we get into the nuts and bolts, is, everything is really, Freddie Mac is just all about a lot of things, all about opportunity, the diversity, the success for your customers, right? For the connections and goodwill. But most of all, we're all for home, and we're committed to making home possible with you. And so the more you're informed about the tools and the affordable suite that Freddie has, the accessibility to you, the more we hope you'll be inclined to use those offerings and making home possible with Freddie Mac offerings. I think this picture really does say 1,000 words. I look at this and, I think about these are the kind of, when I look at these are the kind of families we help every single day. Just regular, normal families striving to achieve their dream of home ownership. And, we definitely work in the first time home buyer and the very low income borrowers, Of course, we help people with, with families with refinance through you, and repeat bars as well, changing demographics, and we keep up with those, that data as well. I don't have a lot of that per se today, but when I'm doing a lot of presentations, definitely have a lot of cool stuff. And that's something that we can talk about in the future in terms of changing demographics and how does that impact home ownership, and just things relative to condo market, or just anything that you can think of. We're creating affordability for many types of borrowers, and depending on what their needs are. I want to bring this to your attention because, yeah, we know it's changed the landscape of mortgage originations. We know that it's taking a decline, right? So I know if you were in this business, which I imagine a lot of you were in 2021, I would imagine you guys had a phenomenal year last year. I mean, particularly in 2021. During the height of pandemic, we were at a $4.8 trillion business. You probably helped a lot of families save money on their payments by refinancing and that kind of thing. And that should be commended. But as you know, I've been in this business, and I know my mentors told me this back in the 90s when I started cutting my teeth on originations, that refinances are absolutely important, but do not ever forget of what the heartbeat of this business is, and that's purchase. And so even though you're looking at the trends on this, even though we're projected this year to be somewhere around a $2.3 trillion business in originations, I want you to see where the bulk of that still lives, right? In that green, and that's purchase. So you stay focused, stay true to your realtors, stay true to your building partners, your realtor partners, stay true to your counseling agents that work with, and other areas that you get purchase referrals. So challenges to home ownership. I know at a day-to-day, you see this a lot. I would only imagine, one of the biggest barriers to home ownership today is still, it was when I got into this business, and it still is in 2023, and that's down payment. Folks just don't have enough money to put into the transaction. 13% of all buyers is still are challenged with this. 26% of millennials. Right? That's a big, space. I'm assuming you're working with the millennial market. If not, that's a key market that you should be focused on. But 26% of millennials, 28 or younger, are have challenges with this. 24% of millennials, 29 to 38, saving for that down payment, right? And having that. But what to me I find astonishing is that 42% don't know of low down payment option programs. So let's take a pause there. What that means to me is there's too many people in our country that still believe that home ownership is for the rich, and I have to put 20 and 30% down to obtain my dream of home ownership. You and I both know that's not the fact, but data doesn't lie. And so this is still, even though you're I know you're on the grind, you're out there, you're marketing, you're teaching consumers that what all options they have, but we've got to do more, right? You've got to do more. Freddie Mac has to do more. Real estate professionals, housing counseling agents, all of us have to, what I call the ecosystem. All of us have to contribute to that. We know about saving when it comes to expenses with student loans and credit card. We know that these things can get in the way, but I'm proud to tell you, Freddie Mac is very favorable when it comes to a lot of those things that you're probably already aware of. So let's jump into it. I just kind of wanted to set the tone with opportunities, some challenges, and just guys thinking. So, let's just talk about solutions. So if you're not familiar with Home Possible is our flagship, low to moderate income product here for talking about affordable lending. It's a product that you can do up to 1 to 4 units starting at a 1 unit at 97% down. So 3% down option, which is fantastic. If you're using an affordable second, you can go up to 105%. If you're doing them, 2 to 4 units, the LTVs change. I'm not going to read everything to you, but you can see even at 95%, that's pretty flexible when it comes to that. So I think that's a good deal. So this can be a fixed rate. We can also do adjustable rates when it comes to Home Possible as well. It is for purchase, it's no cash out refis. We talked about 1 to 4 units. It is owner occupied, primary residence only. The caveat that I really like about this program that makes it different in the market is, that non-occupancy cold bars are permitted. So that's really nice that it allows that. You're familiar with mortgage insurance, so you could do this with lender paid MI or finance a single premium MI is both allowed as well. So you got some options there. And the occupier and borrower can own another property. So they can own something else, but this has to be their primary residence. So I want to go, there's resource page. So I just want to let you know there's going to be resources out there. You can kind of read about it. You can share it with your realtors, right? Because some of this, yes, I'm giving you an overview, but I really, my presentation, I wouldn't necessarily craft myself as a trainer. My role is really, driving a business back to Freddie Mac. So I'm going to have a little bit of a flair to this as it relates to how you can grow your business with these. So not just, how to do them, but how do you grow your business? And so these are great tools to share with your realtor partners and builder partners and how, introducing Home Possible to your other resources. So let's talk about features and benefits. So growing your business, building your community, designated for borrowers with low and very low income options, looking for down payment and flexible funding resources. You can grow your business because a lot of people are not offering this. Everybody doesn't offer a 3% down that they can get access to. That's, from a pricing perspective where it's going to be attractive. So a lot of good opportunities here. What's in it for your borrowers, right? That's what you want to be able to tell them. This is why, Mr. and Mrs. Klein, you want to do this, right? The low down payment option, which is the drive. You do not have to have 15, 20%, 25% down. I'm going to help you get in at 3% down. My job is to help you make Home Possible. We got flexible sources of funds that you can use for down payment, closing costs. It's cancelable, right? Still a champion of that. It's cancelable. So, it does have a sunset when we get to that point of that 80%. At the 80%, it'll have a sunset, not limited to first-time home buyers. So even though I think first-time home buyers is a phenomenal segment, 34%, just to give you a data point, 34% of the market today in 2023 is made up of first-time home buyers. That's third of the population. I absolutely, if I'm an originator on this line for I-Core lending, I would absolutely be focused on first-time home buyers. Supports manufactured housing. So I know, I was learning from the team your footprint. So manufactured may be a play, maybe not, but if not, it's an option. No minimum borrower contribution for a person for one unit. Also allows non-traditional credit as well. So these are just some real benefits to your borrower when you're talking about how to help them get in. But it opens up the doors for your business, right? Because this is competitively priced. So you're able to have the best pricing on this so you can go to market with a great tool. It's lower standard than the MI, right? So standard mortgage insurance, we'll talk about this down the road, but standard MI, as you know, it's usually you require 35% coverage. This has a charter level of 25%. So we've got lower MI to help you get, and you can just differentiate yourself by having these kind of opportunities. You may not necessarily have CRA goals because affiliation to a bank, but this does support your affordable lending goals, I bet, within your own company, right? So there's some great opportunities for you to look at it that way. Home Possible too. I hope you're familiar with this. If you're not, no worries. If you have used the Home Possible too, right, for income and purchase eligibility, that you absolutely have to use this when you're looking, because keep in mind when you're doing Home Possible, not only the income, but there's also a property eligibility as well. And we're talking about the 80% of the area median income and below when it comes to my Home Possible product, right? So it's at the 80% of the area median income, or AMI. And so this lookup tool is going to help you. But remember, I'm going to give you a little bit of a flair. I love this tool because you can look up what the properties are, of course, to qualify and make sure when you're moving down the path with the customer that the income and the property eligibility. But you know what else I would use this tool for if I'm in your chair? I would share this tool with my realtors because this is a public tool. And so when I'm having a coffee with my realtors, guess what? You know what? I know you're listing some properties, Mr. and Mrs. Realtor. I know you are. What I'd love to be able to do is when we have that coffee, let's go through some of your listings and see if it's in some of the eligible areas. I know you've got some listings, some rehabilitation areas here in the California market, here in Arizona, and other footprints that you have. I want to sit down with you to see if those properties happen to fall in that. Be a great way for us to market that together. We're not utilizing the tool from a sales perspective, and we should be. So I'm giving you some good tips. I hope you're getting all this down. We got it recorded. I know I'm teasing, but I really think that's a different way of looking at this. Yes, you have to use this for eligibility, and it's going to show you, what your income is. So it's going to pop up what the 80% area median is, the down payment, those things, what's available. So it's going to framework that all for you. I'm going to pause for a minute because, I've got, a phenomenal underwriter, and she may want to add a word. But one thing, Gene, I love about Home Possible that's very unique to other products that we have is that we do allow cash on hand. And I know you serve markets, I know you serve a lot of ethnically diverse markets, and sometimes within cultures, they treat cash differently. And this is just a nice way, depending when you're working with some diverse cultures, to do that. Gene, would you just want to I want to make sure I'm not leaving anything out, and being that you add value here as an underwriter, how is that, how do you want to just mention any more about that cash on hand for us?
No, and that, I mean, along with our standard underwriting guidelines, the normal sources that are addressed in the guide as far as assets, you do have additional flexibilities underneath the Home Possible program that are above and beyond what our standard guidelines are. Cash on hand is one of those items. If you've got a customer, and as Sam said, it's not unusual for some groups to typically keep cash on hand. I mean, for a lot of us, we are so familiar with banks, but we forget that there is times that people aren't that familiar with banks or do not trust banks. And I mean, my grandmother was one of those. She lived through the Depression years, and she never put all of her money in the bank. So cash on hand is a very good source. Plus, being this is tax time, remember, if you've got somebody that is getting a refund from the IRS, this is a great way to help them get into a home.
Appreciate that, Gene. I just wanted you to put your expertise on that with me. Thank you so much. So it's great because one of the things I did learn from having some meetings with iCard in terms of learning kind of some of your targets and who you're focused on. So I wanted to make sure we reiterated that. So we kind of talked about that here already, and we talked about sources of funds. Let me, so just to reiterate again, we know that this is a 3% is required, on that. It could be, for the bar, it could be GRIF, it could be a grant, things of that nature. So, but it is required on that. Just the value of affordable seconds. So I just wanted to let you know, we remember that we can go up to a total loan to value of 105%. So keep in mind that, what is it? It's a subsidized secondary finance option for first lien mortgages. So if you have down payment assistance programs in your market that you can couple this with, we absolutely encourage that you do, so that you can take your TLTV a little bit higher, right? And so affordable seconds are eligible. So most importantly, I want to reiterate that last box is that affordable seconds are eligible for Home Possible. This just kind of reiterates the MI piece that we were talking about. Remember, I said from a cost perspective, it's a custom mortgage insurance rate. So because of that, it's not standard, it's custom. So you'll get that 25% coverage on the Home Possible than our traditional standard conventional deals. And so this slide actually takes to, I like this slide because, as mortgage professionals, you offer a lot of programs and resources to your clients when you're sitting down with them. And I know when I was originating, I did too. And you probably realistically, you probably have some core products that you really know really well. So the appeal is a lot of times, and a lot of times particularly, which I know that movement is really changing, and FHA absolutely has its place. I help people with FHA. We're going to be helping people in 2023 with FHA, some great changes there, and we're going to be helping people with FHA for years to come. But I would like to always take a pause to see, when I'm looking at all my options as a consumer, I don't want to necessarily think because I've got an LMI borrower, I've got a diverse borrower, or any of these things, that immediately I think FHA. I want to be able to sit down with the customer. I want to look at their total profile. I want to be able to see what happens. And then I can once I learn more information from that, when I have that, I'm just having a nice little chat with the customer, we're just going over everything, then I can really get a better understanding what I'm looking for. Because when I think about Home Possible, my product, the MI for one unit, ends when LTV is less than 80%, where the MI on an FHA loan stays on the life of the loan. Conventional MI, it's a monthly premium. On FHA, it's an upfront and monthly premium. So on my product, the MI is only required if the LTV is at 80% or higher. Or on FHA, the MI is required regardless of the LTV. No upfront MIP with us, upfront MIP and added principal. So I want to bring these things out because we know with more funds applied to the principal up front, Home Possible with PMI lets borrowers build equity faster. And we already know one of the biggest ways to increase wealth here in our country is through real estate / home ownership. And we know that that's why it's exciting when you help that first time home buyer, because you've helped them get on a path to wealth building. And we're creating also sustainable home ownership. So these are just kind of more information, more guides and resources out there. Really want to talk now about Home One, which is probably, an exciting program, probably one of my favorite programs, and particularly, your footprint being in that West Coast area. You're in a high cost area. We already know that. And so what's the benefit of Home One then, Sam? Well, let me tell you, I'm glad you asked me. How would you like to have an offering, to have a 3% down offering with no geographic and no income restrictions? I'm just going to pause. I know you would, right? I know you would. And that's what's exciting about Home One. So all of my California friends on the line today, this is a program you need to take the bull by the horns about, because there's no income restrictions and there's no geographic restrictions. This program was designed by Freddie Mac. You know who was in mind with this program? Take a guess. Millennials. You know why? Because you can tell me better, because you're touching it every day. Millennials have very high education. They make very good money. They've got very good credit, stable credit, and they've got great work history. What's the con at times with millennials? So you might know. Want to blurt it out? It's okay if you don't. I'll tell you. I don't have the cash to put in. I don't have enough down payment, right? I'm not the greatest saving we're not saving as much as we should be. It's fine. Okay. Guess what? Home One is a very good fit. I hope some wheels are turning right now. Hope some wheels are turning. Hope you're probably multitasking, pulling up one of your files right now, saying this might fit. That's okay. You can multitask if you're looking at a deal. I don't mind that at all. So what are the benefits now? Right? So you're talking about a solution for down payment assistance challenges, right? Brings more first-time homebuyers to the table, premium at 3%. Broader access, right? No geographic, no income restrictions. I can help them with homeownership preparedness, right? Because there's going to be some educational steps there. And not every first home looks the same, right? So it's eligible for townhomes, condos, things of that nature as well. So let's just kind of reiterate, it's a purchase product, no cash out refi, owned, securitized by Freddie Mac, right? So just, very similar, except no income restrictions. So let's talk about that. And I'm going to show you really another cool slide. So just a couple of differences here. So I will say one of the things that you got to think about here as a snapshot is when I told you at Home Possible, first-time home buyers, at least one of the borrowers has to be a first-time home buyer. So that is different here. For the units, it is a one-unit property only, no manufactured homes. This is also a fixed-rate product only. Versus you already know with Home Possible, you can do adjustable as well. So just to kind of reiterate, at least one part has to be a first-time home buyer, one unit property resident. Borrowers must occupy the primary resident, fixed rate only. So that's just kind of a quick recap. It is, remember, at the 35% coverage. So it is 35%, not 25%. You already know you can do lender paid, finance paid. You can do that, but it is 35%. But let's pause there. If you're already doing 35% and I need a low down payment option, Home One is the way to go. So I love this slide because I hope what you're saying is, okay, Sam, I'm getting it now. You told us about Home Possible. You mentioned Home One. You got me excited because I live in California. I live in Arizona. That's my market. I live in a higher cost area. I'm excited, but help me understand. I want to make sure I got the difference. I'm so glad you asked me that. So let's take an eyeball it, right? So Home Possible and Home One. The biggest difference I want you to see, and we actually have a report to this because a lot of times we have an internal report where I'll actually call lenders that are my clients and I'll say, you know what? You guys are really doing a good job sending us loans and we're grateful. You've helped a lot of people with Home One and we're grateful for you delivering those loans to us. But out of those, and I'm making up a number, out of those 50 loans, we realized that 30 of those loans could have went Home Possible. And so how do you avoid that? Uh-oh, I could have went Home Possible and saved them some more money. I'm so sorry. What could I have done differently? Well, a chart like this can help you remember. So just kind of keep this deck handy. But one of the biggest differences you want to know is the AMI, right? The AMI is going to be your pivotal point. If they're over 80%, you're thinking Home One. If I've got a borrower that's under 80% medium income, you really, really should be thinking Home Possible as a go-to. And I'll even bring out a caveat for that as it relates to Home One as my final review for Affordable Suite. So you see the LTV ratios where they differ, property types, property types. Remember, you got to keep it to one unit on Home One. On loan types, remember, fixed rate and ARMs are okay with Home Possible, fixed rate only with Home One, reduced MI versus standard MI, right? Keep all these in mind. And remember, at least one person has to be a first-time home buyer. So that would also be required home buyer education. I hope that chart helped you a little bit. So my final slide on this is around housing finance agencies. And I made sure we checked in with the team to make sure. So if you're working with one of your state or local HFAs, right? Housing finance agencies, that's a great thing to do. I want to make sure that you're comfortable with the offering. So HFA Advantage, everyone, is really built on the same platform as Home Possible. Looks very similar. So I'm not going to go through this whole wheel because we already did it in Home Possible. Here's where it gets different, right? So this is really the selling point in Home One, is that I've got this awesome reduced MI, right? So I got this charter level MI at 18% coverage. Home One is 35. I got to do what I got to do there because I'm still getting my bar in a 3% down. Home Possible is obviously better because it's only 25% coverage. But at HFA Advantage, when you're working with your state and local HFAs, 18% coverage. The other pivotal point, right? In addition to having a low down payment option, I'll just go back to this slide for a minute, is the other trigger point should be telling you is, I need more assistance. I'm grateful for the 3% down, but I still need some really more help with my down payment. I don't have it just saved up, right? I'm not going to be able to get it from mom and dad. I need some help around that, but I qualify. HFAs are champions around down payment assistance, and that's what they do. And so the beauty of having the HFA Advantage as the lead primary mortgage product instrument tied to the HFA, so they can't be separated. You got to go through the HFA. So essentially, you're just sending this deal. Don't get worried because, you know, if you're concerned about myths like, oh, it's not going to close on time, it's too much paperwork, all those are myths, guys. They're on the same turn times as if you would have kept it in-house. I can guarantee you that because they're all automated and they're all are fantastic now. There's not one that doesn't understand, I need to close this in 30 days. They all understand that. Have a conversation with them, of course, about it. Get trained to your respective HFA. I'll make that appeal, but so you understand what is required. But you know, if there was any bias of a myth in your head, I want to remove that today because that's not the case. So here's a little recap, right? So just a little recap. So we talked about Home Possible, we talked about Home One, and we talked about HFA Advantage. Before, I want to just show you a couple. We're moving good on time too, by the way. So that's great. I'll take a pause here. I'm going to get into some LPA things because I want you to see kind of now put it into place. But I want to take a pause before I go to Loan Product Advisor to see if there's any questions on that on our core affordable suite. Can I take a pause here, and whether you want to put it in the chat or you just want to unmute yourself and ask? Gene and I are here right now. So we'll take a pause to answer any questions. And then if not, we'll continue to move on to the finishing of the presentation. Do we see anything in our chat right now, friends?
Not right now. Does anybody have any questions? Don't be afraid to ask.
When I say you got when you get an underwriter on the call, this is your time to shine.
So Anna asked, what is a type of acceptable sourcing for cash on hand?
In the guide, we have a little worksheet, and bear with me, because you're building the ability for the customer to have to be able to save the funds that you're working with. It's basically, if anybody's done VA loans, you're probably used to where we used to do the residuals on them. And so underneath the 4501.10, there's an area that's under the source of funds that talks about borrower's personal funds. And then number 2 is cash on hand. And there's an exhibit 23 that kind of carries you through what is their bring home pay, what is their typical expenses, is what you're working with. Rent, utilities, maybe rent to own furniture, some type of, direct deposit, cell phones, stuff like that is what you're working with. A lot of times on a cash on hand customer, you may be also having to bill credit at the same time that you're working with on there. So that's kind of where it is. A single premium MI paid by the bar. Are you asking, can you have a single premium? And if that is, yes, you can. Okay. It went away before I got to see the other question.
It said non-traditional credit equals no FICO score.
Yes. And that is one thing that loan product advisor can do. But if you're doing it as a standard loan product advisor, your max LTV is going to be a 95. And then there are a few overlays in there. Or if your company allows you to do a manual underwrite, then you could take and do so. And it's the normal type of things that you're trying to come up with 3 to 4 credit items with at least 12 months mortgage or 12 months history to try to develop credit for a customer.
And then we have Anna, what is the difference between Home Possible versus Home Ready?
I think Home Ready and Sam confused. I think that's what we meant to be the Home One on here.
So I think maybe Home Ready is very comparable to the Home Possible, and that's the Fannie Mae product. So that's the competitive product, to Home Possible. That's their 3% down, focused on the 80% AMI and below. So some of the guides are pretty similar, but I definitely would make the appeal to, give Freddie Mac an opportunity and see if you're pleased with our tools and resources.
And then go ahead, sorry.
No, and I finally got it to open. The max DTI is still 50. Really programmed inside a loan product advisor, it can go up to a 50.4. But remember, that's going to be the overall characteristics of your file. A housing payment shock, little reserves, maybe little credit or maybe some slow credit. Loan product advisor may not be willing to go to 50 on a customer. And if you're manually underwriting it, your back ratio cannot exceed 45. Another thing I think I heard Sam talk about, we may have people on the phone from California or other parts of the country. Underneath Home Possible, it's the only program that Freddie Mac has that I can use border income. If I've had somebody living with me where we've been renting for quite some time and I'm agreeing to move to the new location, if my roommate buys a house, then we allow you to use border income. That's addressed under 4501.9, just so that border income does not exceed 30% of your qualifying income. So that is also a way to help somebody get into a house.
Awesome.
Anyone else have any questions? You guys can unmute.
Well, if not, we'll keep going with LPA, and some other may come up. So we're still good on time. I want to make sure we meet the respective time at the top of the hour here. So I want to just show you, and keep in mind, some of this, if you don't have a deal in place in the moment and you don't get a Freddie deal for another 30 days, 45 days, then of course some of this stuff is going to, but I just wonder if I can just highlight a couple of things, and Jean also sees this a lot. I want to show you something that's going to make you successful, helping you do your very best to get an accept eligible, right? That's the objective. I want you to get an accept eligible every time you put one in. But I want to give you some indicators If you don't, what could that really mean? So as silly as this may sound, I know Gene can probably attest to this unless it's changed in the last 6 months. One of the biggest, and whether you're using, your AUS system, I don't know who you might use, or you're just directly putting into LPay. But even if you're using some, I don't know if you're using AUS something, but if depending on what platform you use, it'll look a little different. But I will tell you, the offering identifier is the number one culprit why the decisioning may not be favorable when you think it really should be. Especially you're like, wait a minute, I don't understand this. I got my credit is right. My borrower has he's got assets. He's been on he or she has been on his job a while. What's the problem? A lot of times in the data entry part, we maybe didn't check the right offering identifier or didn't check it at all. And I'm going to show you what that looks like. So if it's a home possible, you got to check home possible. And a lot of times in your LOS, it'll be like a 241, it'll just show up. And you see my screenshots here. Or if you're choosing HFA Advantage, right, you'll choose that 251 or it'll come up. But if you're wanting one of those products, now you leave it blank if it's home, and I know that's changing. You leave it blank if it's home one. But if you don't choose anything, it's going to divert to home one. Let me make that real clear. If you don't select an offering identifier, it's going to automatically think you want a home one. And so now the risk engine starts to look different. And so we want to make sure that it's meeting the right loan. So very good, just want to pull that out. I will say, I'm proud to tell you that our feedback messaging is really have gotten so much better over the years, right? This messaging is so detailed. It's going to tell you exactly what you got going on, what we have, or what we still need to maybe still generate all the why. Okay. So,
and Sam, while you're at this screen, and I was just going to bring up, if you did not choose home possible and it underwrote it as a home one, and what Sam's trying to say there, anytime your LTV exceeds 95, Loan Product Advisor is programmed to automatically underwrite it as a home one. So if you see a message saying it's underwritten as a home one, then even if you're going as standard conventional, that is what's happening. And sometimes it's just a decimal point or whatever. But if you ran it as a standard conventional, what Sam has up here, it's going to tell you based off of your qualifying income, whether or not it meets the home possible income limits, which is going to alert you, I can get a better deal for my customer, that lower MI. And I apologize, Sam.
No, don't apologize. That's exactly what we wanted. And like I said, that's what my green box is saying. It's going to tell you if it meets home possible. So if you're not getting that message, just say, wait a minute, I wanted this to go home possible. You got to go back and check if the first thing you want to do is to make sure the offer identifier is right. I know you think this is silly. It's the number one reason why people call 800-Freddie, and people like Gene and others look at that, they switch that around, and all of a sudden, I've got a favorable loan now. I want to save you some of that grief, right? Just thinking, pulling your hair out, trying to figure why is this not happening for me? So here it is right here. So you see, I got screenshots, plenty of them, right? So I just want to show you that little green box. That's what it should look like in your feedback certificate. That's exactly what should be highlighted. It should look just like that. Here is what it looks like, right? So remember, if verify the loan was submitted correctly as the home one mortgage by ensuring that the value entered offer identifier is either blank or null and void. So that's just reiterating what I just said again. This is what it'll look like, and it'll automatically think, to Gene's point, it'll start to underwrite it as a, as a home one, and it'll say those messages. I love these screenshots and hope you do too, because it just kind of makes it clear. Now, don't get me wrong. If you don't have a deal in process right now, I don't expect you to remember this 30, 45 days from now. And that's why you'll have this resource to go back to. So keep in mind, is this borrower eligible, right? So keep in mind that the loan product advisor feedback certificate is going to tell you that, checks home possible income limit. So you got to remember through the tool as well, right? Is this person eligible, right? We want to make sure we can do our best to get them eligible to the income limits. I don't want to spend a lot of time here. I just wanted you to, if you're doing down payment assistance, right? If you're using a support, an affordable second, this is where you want to make sure you input it, right? If it's non-advertising, how you want to insert it, right? Depending on, how that looks. Keep in mind, if the payment is either before due date of the 61st month, the payment, monthly payment under the first lien mortgage, right? It must be equal to 0. And that's all it is. Where when it's an amortizing, then you must enter the payment amount, right? Those are probably some of the major differences. The other ones is making sure you just hitting yes and no. And this, if you're, like I said, if you're using an AUS system, it's still going to prompt you these types of questions. It may not look like this in this format, but you're being asked the same questions. And so this is kind of where I want to just turn it over to Gene again, just to kind of highlight some things. I want to tell you something. This is probably one of our white glove services that we're extremely proud of to offer, and that's 1-800-FREDDIE. Because a lot of times you can't call someone and get a live person, get a live underwriter, get a live tech person, get a live somebody, but you can when you call 1-800-FREDDIE. Gene works on this team on the underwriting side, but we've got other people who support servicing and other parts of the business to help you with this. So I'm gonna make an appeal to you. You've all had that loan. You're trying to make it work. You've probably, made a couple changes here and try to rerun it for automated decision. And you really believe I've got this deal. And you said, you know what? I ain't gonna do this no more. I flip it to FHA. It's gonna approve. Let me keep going. We've all done it. You don't have to admit it if you did or not. But I can speak for all of us. I want to take a pause there. And I want to say the next time you have that deal that you are super confident about, that you cannot fathom why this would not be approved, right? It's not for, I used to call it, it's not the ones that you think is going to just, throw and stick, I used to call it, right? I used to have deals like that too. I'm not talking about that kind of deal. I'm talking about the one you really feel confident about. Whatever your internal process is, whether it's the processor, whether it's a leader, whether it's you, somebody needs to call 1-800-FREDDIE and say, am I missing something? I just want to be clear. And somebody on our team is going to help you. It may not always be the answer you want, right? It may not be the approved eligible, which is the ultimate answer we all would love. But I guarantee you walk away saying, you know what? I didn't get the answer order, but I felt supported. I'm going to the next time I get this opportunity, I'm going to give this loan another try. And that's hopefully that would be the appeal I would ask you to walk away with. I didn't get this one, but man, they sure supported me. I'm going to give this another try because I know I can get this done. Gene, can I have you speak to 1-800-FREDDIE? This is your wheelhouse and how this works. I'd like to yield to you, Freddie. Any comments on this?
All right. And when I used to do FHA loans, when I originated them, for me, the area that I worked in on FHAs, they were always very picky about the property. So if you have some property that won't go FHA, try going this Home Possible way, or even the Home One, because ours are just standard conventional underwriting. We don't have that. You can't have a tree within so many feet of the house, or have some sort of additional requirements. If it used to be, if I had a septic tank and a water well, I had to be on 2 acres of land. So remember this program in the back of your mind, no matter what. When you call in, of course, as Sam alluded to, my primary job is underwriting guidelines, but I do back up for the loan product advisor questions. If you have concerns on not understanding why you're not getting an accept, please don't hesitate to give us a call. Sometimes we can change some things. Just to give you a heads up, I know housing payment shock is a very big thing inside a loan product advisor. If somebody is paying rent today, make sure you put that rent payment in there, because if loan product advisor thinks their present housing is zero and they're jumping to $2,000 a month in mortgage payments, it's going to see that as a risk factor. So try putting in as much correct information as you can up front. Probably one of the biggest things I've run into in regards to loan product advisor is when I'm dealing with student loans, and especially for the people that have had their loans in forbearance for quite some time. I'm seeing their current balances higher than what the original amounts were. So loan product advisor is seeing that as a risk factor. And that's just kind of giving you some ideas when you read the credit report. Anything else that you can think of, Sam, that typically?
No, Gene, I think that's awesome, because when I think about you as the underwriter, I think about, gosh, what other things that you see every single day is like, oh my gosh, if I could just tell one originator to do this or do that, whether they did, I think you did a nice job with that. I think the payment shock is important. I think the offer identifier is important. Anything else that comes to you that you see every day that you say, you know what, this is something I see. One other thing, and I want to do that. Is there anything else that comes to mind? But those things are so critical. I appreciate you expounding on those.
Sam, can you go back to page 16 where you were at the tool? I do want to show them something on that. Because if you happen to be in an area, I think it was page 16, if you happen to be in an area where a customer may qualify for assistance, you see that there on the tool, we fire 100% AMI, 80% AMI, and 50% AMI. Okay, for whatever property address you happen to be putting in there. And then it gives you the home possible income limits, which you'll always see being the same as the 80%. Some assistance programs, especially if you happen to be dealing with a housing finance agency, if they fall into that 50% or lower, that customer may be eligible for additional assistance. Other ones, depending again on your geographic area, they could be eligible for some assistance even at 100% AMI. So keep your ears to the ground. You might hear some of the assistance programs out there that are offered to customers if they fit certain income limits. And that way you're finding the customer sources to help them get into down payment assistance to get into homes.
That's awesome. So I've got one little trivia question real quick. What is the required AMI for home one? What is the required area median income for home one? Anybody?
Looks like you got an answer there.
What's that there, Gene?
Manuel put none.
Somebody who said none?
Manuel.
Manuel, you got it right, man. You got it right.
You get a good keeper.
You get that man a prize. I'll tell you that I was, yeah, you were, as a trick question. You're absolutely right. I appreciate you zooming in on that. There is, and that's what I want to take away. Home one, no geographic, no income restrictions. You go right to the market with a 3% down. Appreciate that, man. Thank you so much. Entertaining me for a minute. So guys, I think we're getting ready to wrap it up. We're here at the top of the hour. I think our timing was right on time. I hope you found this valuable. You know, if you did, I would love for you to consider, you know, taking a picture of this, put your camera on this for a second. We've got, you know, feedback. If not, you can do it on our deck. We'd love to get your feedback of this. You know, Gene Beard, Sam Noel, do that. If you weren't that crazy about it, our names is Minnie and Mickey Mouse. If you don't like us, so you can use either one. But we appreciate you listening to us on that. So I'm going to stop sharing my screen, and I'm going to come back to the group, and we've got about 2 minutes. So I'm going to turn it over back to you guys, and but I'd love to be able to say any other, you know, last questions while we got just another minute here to wrap up. But I'm turning it on back to you. Thank you for the time.
So anybody that might have any questions, take these last couple of minutes. You know, we do have, again, our underwriter on here. So please, you know, take that moment. You guys can unmute. Yeah.
Hey, Sam, this is Javier. I have a question for you that's kind of off subject, but with you guys. Can you explain what an ACE PDR is versus a PIW with FAMI? What's the difference?
The 8. You talking about
I can answer that question.
Thank you.
All right. The PIW was the property and appraisal waiver.
Right.
Okay.
Okay, property appraisal. Well, yeah. Okay. Thank you.
All right. And we used to have either you got a full appraisal or you got an appraisal waiver. But there were areas that we had some comfort level with, but not enough comfort level that we were willing to give you a full appraisal waiver. So the appraisal waiver with the PDF, and I'm going off the top of my head, I need to pull up the announcement. That's basically where somebody is going out and is doing an inspection to the property, making sure that it is still there. It has no issues with it. And so it's a way to get in between those two items, the appraisal or the waiver. Okay. And it's does not necessarily have to be done by a licensed appraiser. So you do have some reduced cost in that.
And that doesn't reflect the value, correct? That just shows like there's been no changes to the place, 3 bedrooms.
Right, correct. It goes off of the value that you are submitting into it when you submit to Loan Product Advisor.
Okay, thank you.
Anyone else that have any questions? We do have a new message from Anna. What is the recommended month's reserves for home one?
Did you want to take that, Gene? I didn't think there was reserves required for home one, but did you want to, you know, strengthen that for me?
Okay, yeah, it took me a minute, Sam, to figure out if I was looking at your screen or my screen, trying to get off of mute. Okay, really, okay. There is no required reserves for either home one or home possible. But as any automated underwriting system, it likes reserves because that is a way to counteract maybe a higher ratio. Or a high, when you're doing a high LTV or something another like that. So it's always programmed to counteract something that may be a negative on the customer. Does that help?
Yeah, hopefully that answers. And okay, yeah, she said okay. I'm looking at it as well.
Like reserves, right?
So basically what she said is it depends. Sometimes it likes reserves.
Yeah, it's not required, but the system, you know, having reserves is always a plus, but it's not required by guidelines. But the system, of course, especially if you're looking for additional compensating factors, yeah, reserves are always nice, right? I think we just know that being in the business. Anything else before we wrap up? Well, I really appreciate that. I will turn it back to you as well, John, but I want to say thank you for the opportunity for Freddie Mac to be on the line with you. We hope this was valuable for your team to spend an hour with us to talk about it. I just hope really now we put it into action. Hopefully my appeal would be you go through your pipes, you look at your new opportunities and you really think, I really can put these Freddie Mac offerings into action. So that's my final appeal, but thank you. I'm gonna turn it over to you.
Thank you, Jean. Thank you, Sam. Very great information, everybody. As you guys know, and Sam mentioned it, we did record this session and it usually does get uploaded to our YouTube channel anywhere from 24 to 48 hours. But if you guys do want the slides, Sam was kind enough to provide them to us. So please email me directly so that I can send that out to you. I hope you guys found all this information very, very useful. Again, we are here to provide you guys tools to be able to go out and, obtain more business and get more clients and find other products to be able to get your clients approved with certain loans. Again, thank you, Sam. Thank you, Jean. We really appreciate your guys' time. This was amazing.
Appreciate you. Thanks for having us.
Thank you. Bye, everybody.
Okay, take care.
Take care. Bye.